here in South Africa. South African vehicle tracking and recovery company MiX Telematics says annual headline earnings per share declined by 18%. The company hurt by the strong rand and the global recession last year. Sales fell 12% to 840 million rand, with the strong rand really taking out as much as 63 million rand from revenue. CEO Stefan Joss joins us now to unpack the detail. Thanks so much, Stefan, for joining us this afternoon.
Thank you for having me.
Well, it's been a pretty tough year for the company, taking the effects of the stronger rand into consideration. If we had to take that rand effect out, though, the company would have pretty much flatlined, isn't it? So run us through the year that was for the business.
Yeah, so leaving the rand aside, because that was already about 3 cents per share. So as you say, close to flat if it had been a constant currency basis. Generally happy with the year, funny enough, taking into account the brutal trading conditions that we started the year with. The first 6 months were really tough, both locally and globally. So our South African vehicle tracking business, Matrix, is quite dependent on new car sales, obviously. So with the really sluggish sales of new motor vehicles, that had an impact on our contract growth, but we weathered that storm, quite well. Cash flow remained strong in most of our business units, which was I suppose a good sign and a great sign in our business, and a sign of the health of our business, that our annuity revenue actually grew 14% on the year, and that coupled with the cash generation is really a solid sign for our business. So
a solid sign. I mean, you're an 840 million rand operation. You've got a spread though across 111 countries. I mean, your experiences must have varied quite considerably in terms of the various territories you operate in. We've been hearing, for example, that Africa has weathered the global financial crisis a lot better than their counterparts in the developed world. Has it provided a cushion at all for the business?
Yes, of course it has. So South Africa still provides a big chunk of our annuity revenue, and that's a great shock absorber for this kind of market. If you look at the US, where we're a fledgling business, we don't have that annuity base. It really hammered us this last year. We've got a laser sharp focus there on the oil and gas industry, and in January last year, when the oil price literally collapsed overnight, that really was a hard hit for a business that was focused on that industry. Thankfully, there's been a bounce back, and our customers are starting to spend again, and our sales pipeline now is in much better shape than it was globally, than it was 12 months ago.
So none of your international operations under review for now. Do you have suitable enough return on investment actually coming in from those international?
Well, our US is still a loss-making operation, but we expected it to be. So it's not, it's a fledgling, it's a startup operation. So it didn't come as a particular surprise to us. But certainly not under review. We have offices in 6 countries around the world, and we export into a total of 111 countries where we work through distributors. But no, we're a global focused business. And
with that focus, there's quite a bit of emphasis being placed on your African expansion plan. So run us through the kind of expansion you expect to see over the next year on the continent itself.
The continent is going through quite a nice growth phase, and it's really helped, I guess, our local business weather the storm somewhat. So where South Africa really took a hit in the early part of the year that we're talking about, the financial year that we've just finished. Africa, funny enough, a lot of the territories that we offer our fleet services into, we're seeing quite strong demand. So that was really a good addition to the business, because until this year we weren't really focusing north of our borders, but.
Well, that on a geographic basis. Let's look at product mix here. I mean, are you seeing a shift at all in terms of what's contributing to the bottom line? Because we are looking at your fleet management services versus your vehicle tracking and recovery versus driver and passenger safety and compliance monitoring. So let's take a look at if there's any shift happening in that regard in terms of where business is being derived more strongly right now.
Sure. So stolen vehicle recovery has pockets of global opportunity. We obviously learnt our business and our skills in South Africa, but that has opportunities elsewhere. We intend to launch a stolen vehicle recovery service in the United Kingdom in the third quarter of this new financial year. The UK has quite a severe car theft problem, interestingly enough. So we have a business there. We have a business with it's a fleet business, but it's got a lot of the infrastructure we would need for a stolen vehicle recovery operation. So it'll add a lot of critical mass to that business, and its cost structure is quite high. So the more subscribers we can add to that, the better the returns, and we think that that'll be a good move for us. We're also seeing a lot of stolen vehicle recovery opportunities in South America, which is where we're starting to look quite significantly at now. In terms of the rest of the world, however, fleet management is where and health and safety and occupational safety is where we're seeing the real growth. The first world kind of growth is coming out of that kind of
We'll
stuff.
take a bit of a look at the fleet management services and what's going to be boosting growth in that regard. But before we go, just out of curiosity, I mean, with your learning ground in South Africa, what's your recovery rate looking like at this stage?
Recovery rate still looks excellent in terms of our South African business. I mean, we'd like to be at 100%, and that's where we obviously started. But it's an ongoing battle with the syndicates. But we still run in the high 80s, and our customers are satisfied, particularly insurance companies, with that kind of return. So we're still very effective as far as that's concerned.
Okay, well, let's move on to your fleet management service. I mean, because consumers, would assume, well, we would have assumed that the fleet management service would have done pretty badly through the recession with, companies cutting back on unnecessary expenses. But in some regards, it could be seen as a very necessary expense in that with companies wanting that tighter control, they'd want to manage their fleets more effectively. Added to that, we've got another support factor coming in that many countries are becoming a little bit more stringent in their legislative controls in terms of carbon emissions and so let's talk about some of the support factors for that arm of your business moving forward.
Right. So you've really summed it up beautifully, that it's a mixed bag. So we've seen decision paralysis in the early start of the year where a lot of the big companies, particularly those in oil and gas, but in other industries as well, really just stopped spending altogether. So we saw an absolute cessation of any kind of spend, and we had signed contracts that were put on hold. Fortunately, that's turned now, and there's life creeping back into that particular industry. On the other side of the thing, there is, as you say, a strong legislative control on health and safety. So hours of service, which is management and monitoring of the amount of hours that a professional driver spends operating a vehicle, is a very big focus internationally, particularly in Europe and in North America, where there are very stringent, rigid controls on that. And our kind of services provide a mechanism for better managing that particular process. Also, the kind of stuff, the data that we measure and report on in a vehicle, we can dramatically improve with using that data to train drivers better. We can dramatically improve the safety of the operation of the vehicle, and that reduces injuries and fatalities on the road. So health and safety, a big focus and a big driver in our business. And the last one is emission control, which is a new part of our business, but becoming an increasingly important part of the business.
Well, very quickly, I mean, with that divvy payout of seeing a 25% increase to 5 cents, it suggests that you're very optimistic about the road ahead. What's your outlook for the year to come?
No, I am optimistic. As I said, our sales pipeline is looking much better than it was 12 months ago. So we're starting this year much more solidly. I can't do anything about exchange rates, so we'll see how that pans out one way or the other. But our oil and gas customers are spending. We're in final stage on some really big tenders, and we think it's going to be a good year.
Well,